What is good, YouTube? It's YB, back at it with another video. Before we get started, I just want to thank everybody who's been watching the last couple videos. It really means a lot. All the love and support I've been getting. Thank you guys so much. If you're new to the channel, subscribe. We got a whole bunch of financial educational videos we're gonna make. We got a whole bunch of different kind of life videos, different kind of topics going on. We're just here to just talk about life and how we can better ourselves each and every day. So if you find value in any of that stuff, subscribe, and we're gonna keep going with some more content. In today's video, we're gonna branch off of the video I made 2 videos ago talking about the 5 things to do as soon as you turn 18. We're gonna branch off of that one, and we're gonna talk about the first thing I talked about there is your credit score. And we're going to talk about ways to improve your credit score. We're going to talk about everything that goes into your credit score, and we're going to analyze the best ways possible to achieve a great and excellent credit score as fast and as quickly as we possibly can. I'm also going to give you guys some personal tips, some things that I've done to get the most out of my credit score and to improve my score for the long term as quickly as we possibly can. Essentially, there are 5 things that go into your credit score, and I'm going to try my best to explain each and every one of them. That way you understand what's going into your credit score and how it's run. The first thing that goes into your credit score is payment history. Now, payment history is 35% of your credit score. So this is the most important, the most major factor contributing to your credit score. Essentially, what payment history is how well you've been able to pay your credit over time. You know, if you've been able to make payments on time, if you haven't missed any payments. You can imagine that this is lenders and banks' #1 priority when going into your score, because they want to make sure you're able to pay your card on time, pay it as best as you possibly can, and make sure you don't miss any payments. So here's exactly how that works and how all that's calculated. The credit lords will look at your on-time payments and divide that by your total payments, and that will give them a percentage of the amount of times you pay correctly. So to give you guys an example, if you guys have had a credit card for 5 years, that's a total of 60 payments in total each month. And let's just say you missed one of those payments. That would give you 59 made payments on time divided by 60, which is the total amount of payments. That would give you a 98.3% paid on time ratio. Now, a 98.3% paid on time ratio isn't terrible, but you want to try to not go underneath 98, 97 at the most to keep improving your credit score month after month. So it's extremely important to try to make these payments on time every single month, and at the least make the minimum payment, because fortunately the credit card companies only report it as a missed payment if you don't pay the minimum payment for that month. So luckily that gives you guys a little more leeway into making these payments and to improving your credit score. Now, this is why it's big to not only have your credit line as long as possible, but to have multiple credit lines. That way you're making more on-time payments and your total payments is always a lot higher. That way, if you for some reason happen to miss 1 or 2 payments, it won't affect you as much as if you had less payment history. Now, your second major thing that goes into your credit score is your utilization rate. Now, your utilization rate takes up about 30% of your credit score. So this is another extremely important topic and another extremely important factor that goes into your credit score. So for example, if you have a credit line of $1,000 and you spend 600 of that credit, you have a credit utilization of 60%. So ideally you want to keep it as low as you possibly can. That way lenders don't look at you as somebody that is using all of your credit, which kind of in their eyes looks at it as this person needs the credit as much as possible. He's using it. Therefore, they view you as a risky lender. Now, they want to know the percentage of your credit utilization, not how much you're spending each month after month. They don't care about if you're spending 100, 200, 300, but they need to know the percentage out of all the credit line you have divided by the amount of credit that you actually use. So let's kind of piggyback off of the last example. Let's just say if you had a total of $10,000 as your credit line, if you spent the same $600 like we did in the last example, your credit utilization rate would only be 6% as opposed to the 60% from the last example. This ties into the power of having multiple credit cards and multiple credit lines. That way you're able to spend more while keeping your utilization rate as low as you possibly can. Now, this doesn't mean you can't go over 10, 30, 40%, but ideally you want to keep it underneath that. But if you have to go over, just make sure you're paying off as much as you possibly can of that at the end of the month. That way, the credit card companies have less money to report that you're using. A nice tip for this one is every 6 to 12 months, call up your credit card company, ask them for a credit limit increase. That way, every so often, your credit limit is continuing to go up and up. That way, your utilization can keep staying low and low and low. The third major thing that goes into your credit score is your credit length. Now, they say that length doesn't really matter, but when it comes into your credit score, this is something extremely important. This one is extremely self-explanatory. The longer you have credit, the longer you have credit history, the better off your score will be in the future. So I strongly recommend opening a credit card as soon as possible. That way you're building the foundation of your credit history, your credit length. That way in the future, you'll have years and years and years of credit for them to look back on. Now, to explain a little bit better, it isn't the amount of years you've been in credit, it's the average amount of years you've been in credit, not the total length. You get what I'm saying? It isn't if you've been in it for 5, 6, 7 years, it's your average amongst all of your cards. For example, if you guys have opened a credit card 4 years ago, that means your total credit length is 4 years. Now, if you open up another card today, that would reduce your credit history or your average history to 2 years instead of 4. The same thing also applies if you cancel one of your credit cards, because if you cancel one of your very old credit cards, it can reduce the amount of length or the amount of years that you've had credit, and it will therefore lower your score due to the fact that it's decreasing your average history length. For this one, there isn't much you can do at the moment besides just have patience. Just understand that if you open up your credit card, that all you have to do is just wait for this one. Just keep your credit card as long as you can and continue to make on-time payments, because the length of your credit really matters. Now, the fourth factor that goes into your credit score is your credit lines, or the amount of credit lines you have. Now, lenders want to see that you're able to pay multiple lines of credit or multiple different kinds of credit respectfully and responsibly. That way that they can trust you more and more. This essentially means that the more diverse you are in your credit portfolio and the more amounts of open credit lines that you have, the better off your score will be in the future. For this one, I wouldn't worry too much about it, since it only takes up 10% of your credit score, and this one really takes time to build. You're not going to be opening up tons and tons of loans and types of credit cards right off the bat. So just have patience with this one. Take your time and slowly build it up. And just remember that this one may look as a negative in the beginning, but actually having more lines of credit is essential to help you out with the other aspects of your credit score, like having lower credit utilization and longer payment history. Now, last but certainly not least, guys, the fifth factor that goes into your credit score is how many hard inquiries you have on your account. Essentially, if you go out and open up a new credit card or a new loan, that is going to be a hard inquiry on your credit score. Now, you want to try to have as little of those as possible. Like, for example, if you go out and open up 2 credit cards and a loan within a week or 2, lenders are going to look at you like, why is this person taking out so much credit? Why does this person need so much money? You're not trusted. No, but seriously, good news is that they only come up on your credit report for 2 years, and they only impact your credit score for a total of 1 year. It's only really going to affect you for the short term, but in the long term, it does nothing but benefit you due to the fact that you're opening up a new line of credit, and again, increases your credit length, increases your payment history, and it keeps your utilization low. So just remember, this one doesn't mean don't go and open up new credit cards ever. This just means that for a short period of time, your score will go down a little bit for opening up a new line of credit, but don't you worry, it will recover. This is another reason it's really important to start applying for credit cards as young as you possibly can. That way, your score will be, again, hurt in the short term, but in the long term, in the future, when you really need it to apply for mortgages and loans, your score will be a lot higher then as opposed to it is now. This is why, for me personally, at such a young age, I'm trying to open up as many credit cards as I possibly can. Again, not all in the span of a couple weeks or a couple months, but slowly open up as many as I can. That way, 5, 6, 7, 10 years into the future, all these hard inquiries will be gone, but I'll have a lot of credit length, low utilization due to my high credit limit, and a good payment history. history. So guys, those are the 5 major contributing factors to your credit score, and these are tips and things that will continue. If you do all of them and you make sure you understand all of them, they will continuously improve your credit score month after month. Now understand that a good to excellent credit score is considered above 760. So if I were you, I wouldn't stress. If you're around that 750, 60, 70 mark, don't really, stress yourself out about getting higher. As long as you try to get yourself above 760, you'll be, optimized for the best interest rates, the best loans. But for me personally, I kind of want to have that high 800 credit score just for bragging rights, just to feel accomplished, just to have a little more oomph over everybody else. So to end this all off, just understand that it's important to know how exactly your credit score is functioned, how exactly it's calculated, and everything that goes inside of it. That way you're more equipped for the future and better off with your credit history. So I want to thank everybody for watching the video. I had a lot of fun making this video, doing the research, making sure I had all the percentages and all the words calculated correctly. I just hope you guys got a lot out of this video. I hope you guys learned some things like always. And if you guys have any questions about anything I discussed, you can hit me up in the comment section. I'll reply back 100% of the time. And I'm just here to help you guys as much as I possibly can, because I know something like credit is a little complicated, isn't really taught to us in school ever, and it's something so essential for our future. So if you guys have any questions, again, hit me up on the comments. I got you guys. And I just want to thank you guys again for sticking to the end of this video. I'm not sure how long this is going to be, but I hope it's a little more manageable than the last couple too. And again, thank you guys for watching the video. I'll see you guys in the next one.